Hi, I've got Douglas Isles, one of the investment specialists from Platinum, with me today, and really wanted to ask you, Douglas, about the pressing question on many of our clients' minds. With international equity returns being really strong over the last couple of years, have Australian investors missed the boat?
Thanks, Catherine. Certainly not. We think that there are two things here. Firstly, the short term. It's been a strong year last year, and obviously that lends people to thinking maybe they have missed the boat. But the more, which I don't think they have, but the more important thing is structurally. We think that the asset allocations, if you like, in Australia are far too domestically focused. And if you take it at its broadest level, people have a house here in one of the most expensive markets in the world. If they're still working, they're paid in one of the highest, the highest salary country in the world, which probably makes us less competitive in the long run. And then they have more money in their home market than anyone else in the world and a bigger balance to start with. So add all these things together, and Australians are very, very exposed to Australia, which is not a broad economy. So obviously the resources boom has helped here. We understand that investing in Australia has been very successful over the last 20 years. But when we look forward at the balance people have in their portfolio, it's far too skewed to this home market. And this is a problem around the world. Familiarity leads to people investing in the home markets. Here there's a tax incentive as well. But if we flipped it round, if you were anywhere else in the world, you might look at Australia as at 2% of the world stock markets, 1% of GDP, what have you. You would not be putting half of your growth assets into this market. In fact, you'd probably be putting almost none. So and when we build our global portfolios, I think we've got 1% in Australia, a couple of resource stocks that we like. So that's a problem. Tactically or nearer term, the markets have been driven by the US. So the US market's done particularly well. Last year was all about, and particularly the second half, was the US market and the US currency. So they've moved strongly, but the rest of the world is yet to move. And we think that because the media is very US-centric, people often miss that side of things.
That's great. So really happy that you're guaranteeing that there'll be some more double-digit returns for our investors coming up.
I can't guarantee anything, Catherine.
But keep up the good work. Thanks very much, Douglas.
Thank you.